Morning traders, Paul here with GammaEdge's. Today is Monday, the 24th of April. Let's get started. Pause your players here, read to the very bottom. If you agree, hit that play button. The overall summary for today is mixed. We are in a downtrend continuation from Friday. Just be aware of that. The short-term models are weaker as of Friday, and potentially, we could have a continuation in that direction. The overall longer-term models are starting to become more mixed. We do have a new signal in the Tick SP, which is the tick on the S&P 500. It is now, quote, above its ribbon, unquote. And what that means is this is a confirmed uptrend. No call to action. It is a confirmation signal. But now it, with the ARCX, which is the NYSE, the NASDAQ, and the Amex ticks, are now showing that we are getting some larger participation. Could be short-lived. We don't know. It's not predictive, but just be aware of it. Market breadth, as viewed by the 52-week new high, new lows, had the 52-week new lows still outpacing the new highs. As long as this continues, you cannot get out over your ski tips. You cannot go hugely long, and I would use any of the rallies potentially to add to a longer-term hedge to the downside. That stated, overall, the structure looks as though it's well positioned this week to take advantage of a short-term bounce upward. We are seeing out-of-the-money calls go in. We're seeing out-of-the-money puts being closed. When we have that structure, that means the market is voting that we will see a little bit of a bounce this week. We'll see. Transition for the SPX combo is the same as we projected this last Friday, 41.15, 41.20. Remaining above this will be bullish. If we get a close below this, this may embolden the bears, and that 4100 level will become very real. The SPX combo complex, the out-of-the-money calls are dominating the upside. There is no doubt about that. And until we start seeing more and more of the in-the-money puts start coming through, the OTM folks are still, call speculators are still in control and still thinking we're going to move up. Below us, in-the-money calls are dominating the support. This is important because at the end of the day, even though we do have a crack in the ice at 40.90, the out-of-the-money put speculators are not showing up in force, although they are more present in the PM structure than they are the combo structure, and you'll see that here shortly. For the 0DTE folks who are in the Discord, 4150 is your upside target. We would watch for stalling around that 4160, 4165. You can watch intraday the value SPXP command, which is our own internal PM settled tracking symbol. And then to the downside, 4100, as I said, that is the downside sensitive strike. A loss of 4125 intraday suggests that opening and real test of 4100 and closing below 4125 today would be bearish overall. It would embolden the bears. Now, if we close below this 4115 that I said, that would be a very strong negative signal, so be aware of that. Taking a look at the cumulative tick, this is a composite view. This is our market model. You've got three signals overlaid here. The first signal is the shortest term signal. This is called the cumulative tick, and it basically is down from where it was on Thursday's close. This is a downward day. The second signal is what we call the railroad track pattern. It's been back and forth whipsaw, and you get this in a directionless market. That's what happens when you trend follow. But on Friday, it did start to show this downward move. And then the last signal we have is a longer-term uptrend, the ARCX, and as I just said, the SPX longer-term trends are now still with the shortest moving average in a positive slope, the longest moving average in a positive slope, and the CT is now above that. When we have that condition, that is a long-term uptrend, and although it is not confirmational, as I said, it is confirmational, but it is not actionable from the SPX perspective, it's important because this is showing that your longer-term view should be looking out perhaps to that bullish stance. Now, that being said, just going back here, the Russell, the NASDAQ, and the U.S. Composite are all still down or not participating. So don't get out over your ski tips. There are only 2 of the 5 that are really confirming any solid action to the upside. That's a narrow slice of the market. It is worrisome, so just be aware of that. Taking a look at Gamma on the ES, pretty much unchanged. We do have a tightening of the transition structures. We've had a move up of minus trans and a drop of plus trans. When we see that with price here, the market is positioning one way or the other for a move, a break in either direction. Obviously, the more we see some of the puts go in, that has the influence of being able to take advantage of the downside, and anytime we see calls go in, that would take advantage of a move upside. Not predictive, but just be aware that the structure is relatively unchanged, but some tightening, which indicates a break in either direction. Taking a look at the overall gamma structure on the PM complex, we do separate them. First of all, very, very tight in transition. We track transition. We're just slightly above that. This is weekly bullish right now. 41.50 to the upside is clearly the line in the sand that we have to navigate. You can see the quarter levels at 25. Or 75, excuse me, and 4,200 sitting right here. We are strongly dominated up here, so this is good, and compared to Friday, we've had actually an increase, which is fairly significant. To the downside, still a little bit weaker. We've got the out-of-the-money put speculation is present, although it is a little bit weaker than what we had on Friday, but you can see with the lack of all the green deltas here, we do have out-of-the-money puts that are indicated here, so just be aware of that. Taking a look at the 0 DTE, very tight transition range, 4150, 4100. So these are the key ranges that we're looking at here today. And as I indicated, that 4160, 4165 level, probably not going to push above that unless we target this 4165 and clear this delta node that exists right here. Taking a look at the 1 DTE, the transition range is this 4120, 4140 area. It's relatively unchanged from where we are on Friday. We do see a little bit of this node developing here for tomorrow. We do think we're not going to get much if we do rally at all today or tomorrow. The 4185, 4190 is going to be an extremely difficult level to get towards. We've got to get through this little level here at 4155, 4160. Don't think we're going to do it by by tomorrow, end of day. But just be aware that it does exist. Below that 4115, 4120 zone, things get kind of messy into tomorrow's expiry. We'll note, though, very weak. This is not something that you should put a lot of faith in today, only because what's happening Tuesday, Thursdays are still individually weak compared to the Monday, Wednesday, Friday expiries. So we'll see a lot of the 0 DTE action populate this, and that's why that value command within the Discord can be very, very insightful and useful for you. Taking a look at the crystal ball this week. Transition range is still very tight, 4120, 4125. So a break below 4120 opens the door to 4100 and points lower. As long as we close above this 4125, 4030 area, the 4150 is going to be clearly in the crosshairs. We'll note that we are seeing the magnitude of the 4150 calls, which is short-term positioning for an upside move, and we are also seeing the out-of-the-money call speculators. They are a little stronger this week than they were on Friday, so clearly they've gone in, and the overall mood is upward. Now, to the downside, the out-of-the-money put speculators are present. They are starting to erode the sands underneath our toes here, so just be aware of this, that it's going to be a battle going on, and that's indicated here by this really, really tight transition. Pretty well defined for the week. Taking a look at the combo. Very interesting. So we've actually strengthened across the entire complex. Now, this is nearly 17 million contracts of the SPX. This is the largest liquid instrument in the world, right? So it pays to take a look at this and see what we're seeing. So the 4115, 4120 range, you'll see that also on the next slide, is a real key level. We do have this crack in the ice that I indicated earlier at 4090. We also have this 4060 level, which is almost flipping, although it did come positive over the Friday's action into the weekend. So as long as we maintain in the money calls down here and the out of the money puts are in a minority, we are in on solid footing, and you can see the runway to the north, very, very clean, positive out of the money call speculation to the north. This is great. You've got to watch this. The path north exists. It's that simple. So don't don't try to go counter trend here yet. Certainly, there is a structure here that is very, very supportive in the combo complex for longer term positioning to the north. Finally, taking a look at this last slide, you can see the definition of the transition. Just be aware of these levels: 41.10, 41.15 to the downside, 41.20 to the upside. That is the real key. Very clean, very defined. You can imagine that if we get down into this area, we're trapped. And we've seen this before, and that's why we track transition. You can see there's 3 different strikes down here that are in contention: the 3,800 here, the 3,900 line, and the 4,000 line. Any one of those could become minus GEX. Just be aware that there are other services who are reporting the magnitudes of these things as being, the minus levels. It doesn't really matter. Just be aware, though, that if we do move down into this area, we're going to see a lot of put development, and it could be at any of these strikes. That's important, right? If we see the puts go in, the out-of-the-money puts speculation to the downside will start driving us further lower, and you can see we can get trapped pretty easily, very quickly as these lines all grow. To the upside, 4150, 4200, and 4300 is indicated right now. If the call speculators have any sense that we're going to move up, we'll expect to see the 4,200 line grow and this 4,150 line, perhaps the 4,175 like we had last week where they were all in tight contention. You can see we could bounce back and forth between 42 and 43. It just depends on what the call speculators do for the week. So that's it for today. If you have any questions or comments, want to come in, kick the tires, go to GammaEdge.us. Upper right-hand corner, there's a pricing tab. Click on that. Fill out the blanks. Come on in. 14-day free trial. All the tools turned on. No risk to you. We don't charge your credit card until after the 14 days. Excuse me. Follow us on Twitter at GammaEdge's with an S. And then here on YouTube, of course. If you like today's content, hit that thumbs up, smash that like button, etc. And then, of course, follow us or subscribe, because Taylor and I post a lot of videos. We want you to see what we're seeing and help you understand how to play this role of Gamma, Delta, Charm, Vanna, all of those things, and see if it can make a positive influence, have a positive influence on your trading. A lot of traders, over 200 in the Discord right now. All are pretty much amazed, and we would urge you to come on in, kick the tires, and see for yourself. So with that, I bid you farewell. Make it a great week, and hope to see you in the Discord. Thanks, everyone.